Welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets. Today, we're diving into a fascinating stack of sources that reveal some of the biggest movements in the tech world right now. We're talking the intense race for AI talent, the crucial world of chip manufacturing, and what it all means for you.
Yeah, we've truly got a lot to unpack here. Our sources paint a really vibrant picture of how major players like Meta, Samsung, and, well, even entire countries are strategically positioning themselves in this landscape. It's changing so fast. It's a real snapshot of where innovation is accelerating and, maybe more importantly, where the most significant challenges lie, and the opportunities, of course.
Okay, so let's jump right in then. Our first set of sources points to Meta's massive, almost aggressive push into AI. And it sounds like Mark Zuckerberg isn't just, signing off on things. He's incredibly hands-on. What's the story there?
He is, yeah. Very personally involved, and you can really see it in their recent internal shakeup, their reorganization. They've brought in some truly top-tier talent, people like Alexander Wang, the Scale co-founder.
Oh, right. Scale AI. Yeah.
And Chang'e Zhao as the new chief scientist for what they're actually calling their superintelligence labs.
Right.
And the explicit goal for this group, this comes straight from Zuckerberg, is to develop human-level AI.
Wow.
Which isn't just, smarter software. It's aiming for AI that can reason, learn, solve problems, kind of like humans do.
Yeah.
Across a broad range of tasks. It's a huge leap beyond the narrow AI we see mostly today.
Human-level AI.
Yeah.
That is audacious.
Yeah.
I mean, that's a massive goal. So with an ambition that big, how deep are they actually going to assemble the team? Are they still recruiting hard for this?
Oh, absolutely. They're definitely still hiring. When they first dreamt up the superintelligence group, the target was, I think, around 50 people.
Wow.
And based on one source tracking them, they're currently only at about 30 or so.
30 out of 50. Okay.
Yeah. And remember, they also have another chief scientist, Yamakun, who runs their bigger, broader AI research division. Mark Zuckerberg has made it really clear this is a collection of talent, and they'll just bring in as many good people as they can possibly find, which, really highlights the intense global competition for the very top AI minds that get snapped up fast.
Right, that global competition. Speaking of which, our sources also give us a slightly different take from China. The founder of Alibaba Cloud apparently commented that Silicon Valley is just too expensive for early-stage innovation talent.
Mm-hmm.
What's the takeaway here? Is this AI race just about who has the deepest pockets?
Well, that's what's so fascinating, the diverging philosophy, right? You've got Meta aggressively trying to concentrate the best, most expensive talent in this focused group. But the view from Alibaba Cloud suggests that maybe for really early stage stuff, the breakthrough stuff, it's less about the highest bid and more about finding the right person, someone who can unlock something totally new. They seem to think there's huge potential in exploring tech nobody even knows about today, rather than just chasing the established, costly stars. So it does raise that big question for the whole AI race. Is it pure spending power? Or is it more about strategic nurturing of innovation, maybe finding talent differently, more cost-effectively?
That's a really interesting contrast.
Yeah.
And this whole talent race, it's not just about code, is it? It's totally linked to who can actually build the hardware to run these complex models.
Which brings us straight to chips. We just heard about a massive deal, what was it, $16.5 billion, multi-year, between Samsung and Tesla for AI chips, the next-gen ASICs chips. That feels like a huge vote of confidence in Samsung. What does it say about their chances against, the giant TSMC?
Oh, it's a truly significant deal for Samsung.
Yeah.
Huge, especially for their foundry business, the part that makes chips for other companies. Look, they've been working really hard to compete with TSMC. TSMC has had, over 50% market share for the advanced stuff?
For ages, right. Exactly. So having Tesla, a really high-profile marquee customer for these ASICs chips, chips designed specifically for self-driving AI's intense needs that's strategically massive. It shows Samsung can deliver on the cutting edge, yes, but it also starts to shift the power dynamic a bit. Companies have been so reliant on TSMC, which creates supply chain risks, right?
Yeah, definitely.
So Tesla moving some business to Samsung isn't just about chips. It's strategic diversification. And that could force more competition, more innovation across the whole foundry market, which is good for everyone, really.
So competition's heating up. What does this actually mean for Tesla's self-driving plans?
Yeah.
I heard this thing about Elon Musk wanting to wander the lines, help with production in Texas. Sounds like he really wants to be in the thick of it.
You're right. That desire for proximity, being near the Texas fab, it suggests he wants to be deeply involved in the engineering, the ramp up. And yeah, this A6 chip is absolutely crucial for Tesla's self-driving tech. I'm hoping to bring that in force, as they say, next year and the year after. And if you connect the dots, it also ties neatly into the U.S. CHIS Act.
Ah, right, the government incentives.
Exactly. That act offers, what, $39 billion in incentives to rebuild domestic semiconductor manufacturing. So by expanding in Texas, Samsung gets those benefits. Plus, they can supply U.S. customers like Tesla directly, maybe avoiding some tariffs on foreign-made chips. It's definitely a step towards rebuilding a stronger U.S. semiconductor base.
It is fascinating, isn't it, seeing overseas manufacturers setting up shop here, essentially helping rebuild the U.S. industry. So with Samsung making this move, does this mean we're finally seeing a real, viable alternative to TSMC emerge?
Well, the industry has certainly been wanting more competition for TSMC for a long time. Intel hasn't quite made the splash everyone expected with its foundry business, not yet anyway. But Samsung is clearly stepping up. This Tesla deal is a pretty strong signal, I think. It suggests the market is starting to get that healthy competition it needs for the really advanced chips. Everyone wants options, a secure supply chain.
Okay, so we've covered talent, we've covered the hardware, the chips. Let's shift gears a bit to something just as vital, the race for AI adoption. Our sources are highlighting that, beyond who builds the best AI, the real economic win might go to the countries that figure out how to use it most effectively. That feels like the next battleground.
You're absolutely spot on. It's a critical distinction. This race on AI adoption, as the sources put it, is still largely up for grabs. Anyone could win this part. The U.S. AI Action Plan really emphasizes this. It focuses on things like developing talent, yes, but also the workforce needed to use AI. Plus building the infrastructure, the data capabilities, and getting the governance, the rules right.
Right.
And the U.S. definitely aims to be a net exporter of AI stuff, hardware, cloud services, the whole package, recognizing that good adoption elsewhere will often rely on U.S. tech.
Okay, but what about the really tricky issue? Copyright.
Yeah.
Especially around the data used to train these AI models. That seems like a huge sticking point everywhere.
It is a massive issue, yeah. Not just in the U.S., but globally. The U.S. president has actually spoken pretty forcefully about how important training data is for AI builders and the need for them to use it, quote, with relative ease to stay ahead in the global AI race.
With relative ease. That sounds like it could clash with creator rights.
It's definitely a complex balancing act, isn't it? Pushing innovation versus protecting intellectual property. We can probably expect more clarity or at least more discussion on this from the White House in the coming year. It's not going away.
No, definitely not. And how do things like tariffs and regulations like the big EU AI Act, how do they fit into this global adoption race? Could they help or hinder?
Oh, they play a huge role. Absolutely. The tariffs, like the recent U.S.-EU 15% deal on exports covering chips and cars and things, they directly impact supply chains, costs, competitiveness. And for the EU, their own AI Act, well, it aims for ethical AI high standards, which is laudable, but there's a risk it could create digital sovereignty barriers, as one source put it, if it's not balanced with streamlined rules, maybe mutual recognition of cybersecurity standards with partners, it could actually hinder adoption within the EU.
So too much friction could slow them down.
Exactly. For the EU to really get the benefits of AI, the focus probably needs to be on making it easier for industries to adopt it effectively, not just regulating it, finding that balance.
Right, that balance. Okay, speaking of market dynamics and global impact, let's talk earnings. Our sources say we're bracing for a huge week of big tech earnings calls. The Magnificent Seven are under the microscope. Microsoft and Meta seem to be leading as AI innovators, showing some early wins already. But Apple and Amazon, maybe facing more questions about China exposure or, where their big AI play is. What are the stakes here?
The stakes are incredibly high. The bar is just set so high for these companies. Even though the overall earnings growth expectation for the group actually came down slightly from like 19% to maybe 16%.
Still pretty high.
Oh, yeah. And they need to do more than just meet those numbers. They really need to beat the current quarter's expectations and raise their forecasts for the future. That's what they need to do to justify these really high valuations, especially the ones near all-time highs.
If they don't.
Well, we saw it recently with Alphabet and Tesla. Companies that don't deliver are getting, frankly, punished by investors
Right.
pretty hard, while the ones that do beat expectations get strongly rewarded. It's a very high-pressure situation, and AI strategy is front and center in every call.
Okay, so this high-stakes, high-pressure environment,
Hmm.
what does it mean for the IPO market? That seems to be showing some real signs of life lately. We saw Figma, the design platform, boosting its IPO price, aiming for like $18 billion. This seems like a strong signal. But why now? What's finally cracking that window open again?
That's a great question. And yeah, the sources indicate that VC-backed IPOs are definitely coming. It feels like it's really happening now. And it seems to be because three key conditions have kind of clicked into place over the past year or so. First, you've got stability in interest rates. The Fed's even hinting at potential cuts down the road. That helps valuations.
Okay, stability helps. What else?
Second, the public market itself is relatively stable and near record highs. And the VIX, the market's fear index, it measures expected volatility. It's
Right.
been at like a 12-month low, which signals unusual investor confidence, less nervousness. And third, you've had some recent successful IPOs, Circle, CoreWeave, a few smaller ones. They've shown the public market is receptive again.
Ah, proof of concept.
Exactly. Companies stayed private for a long time, yeah, but that window for going public, it seems to be genuinely opening up now.
That is fascinating. So the window's opening, AI is driving insane growth.
Mm-hmm.
What are the VCs, the venture capitalists, looking for right now? What makes a company irresistible in this climate? Is it just AI?
It's not just AI, but AI is a huge factor. The main focus, according to our sources, is on companies that are both durable and defensible.
Durable and defensible. Okay, unpack that.
Durable means they can sustain their business model, their growth, for the long haul, 5, 10 years, not just a few flashy months, real staying power. And defensible means they've built something hard to copy, a real moat around their tech or their market position, something competitors can't just replicate easily.
Got it. A strong foundation and protection.
Right. And AI, especially generative AI, is fueling just unprecedented revenue growth in some cases. We even heard this rumor about Anthropic going from maybe $1 billion to potentially $4 billion in annual recurring revenue in just 6 months.
Yeah, that's incredible growth.
It really is. So the sweet spot for investment often seems to be how generative AI can boost productivity, specifically in the enterprise software stack. Less focus on consumer apps, maybe, more on tools that give businesses a clear, tangible return on investment. That's where VCs see durable value.
What a journey through the tech landscape today. Seriously. From Meta's super ambitious AI teams and that global talent scramble, to Samsung landing that huge Tesla chip deal, the whole race for AI adoption, not just creation, and then tying it all to the high-stakes earnings and the IPO market finally sawing out. It's just moving so fast.
It really is, and it truly all connects, doesn't it? That relentless chase for the best AI minds, the fierce competition in making the chips they need, the whole strategic game around adoption and regulation, and then how all of that ripples through market valuations and whether companies feel ready to go public again. It's this incredibly dynamic, interconnected ecosystem. Each part pushes and pulls on the others. It's constantly shifting.
So as you listening reflect on all this, maybe think about this. How will the outcomes of these huge global tech races in talent, in chips, in adoption, how will they actually shape the devices, the services, maybe even the daily interactions you have in the next few years? It really brings these big industry shifts down to a personal level, doesn't it? Thanks for tuning in to Byte-Sized Tech. If you enjoyed the episode, like, comment, share, and subscribe for more fun tech discussions.